Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Really quite a bit to digest in the last week. Firstly, we had the Fed's preferred sort of inflation gauge, personal consumption expenditure. That came in pretty much in line. Just a tad lower at 2.8 versus 2.9 expected year on year. So that was certainly good news, and clearly a further indication that inflation is clearly on a downward path. There was a small downward revision to our GDP to 3.2 from 3.3, but that's still running at a pretty reasonable rate. And if you look at it, for many who were predicting a recession in the US, that clearly doesn't appear to be the picture at present. We then had Fed Chairman Powell testifying before Congress, and again sort of reiterated that the Fed is not in a position yet to be cutting rates. And certainly if you look at it, the US economy probably doesn't need a rate cut yet. Though interesting for Fed sort of predictions for year-end rates, still anticipating at least 2 cuts by year-end. Now what is interesting is the 10 years backed off now, 409 on the 10-year, and the 2 years back to 453. So the US economy ticking along at a pretty reasonable rate, a little bit more focus now on the political situation, and having just seen Super Tuesday, where Trump and Biden pretty much swept the board. Nikki Haley did manage to win one state. But on the back of that, Nikki Haley has now suspended her presidential run, and that just leaves Trump and Biden as a clear rematch. Which is quite ironic, really, because many Americans, over half, really don't want to vote for either of them. But it looks like they will be the only names on the ballot. Now, Trump did have a minor sort of victory in the fact that he was allowed to be back on the voting papers. However, it's now come out that the Supreme Court will now hear the immunity case in April the 25th. And that's going to be pretty interesting. And all the time the clock is ticking as well for Trump to come up with the 450 odd million bucks for his fines. He is appealing that, but he still has to deposit those funds. And despite all his grandstanding before the sort of trial started about how much money he has, his lawyers are now coming up and say actually he probably doesn't have that to be able to stump up with the 450 million. And all the time that's accruing interest at about just over 100,000 bucks a day. Interesting, crypto and Bitcoin set a fresh high, but then fell about 10% within the next sort of couple of hours. But he's now back above 60,000. Equity markets setting fresh highs, and interestingly, Japan as well set a fresh high, and that's a 34-year high. We haven't seen these levels since the late 80s. Now, oil is back around sort of 80 bucks. That's really on the back of OPEC Plus sort of agreeing to these sort of supply cuts going into June of this year. Now, in the end, the UK budget really didn't give away too much. There was a small cut on national insurance. And a change to the non-domiciled tax status, whereby sort of, the rich who don't domiciled in the UK only have to pay tax on the income earned in the UK. That's now been scrapped. But it does look like it's going to be a pretty tough election for the Tories to get re-elected. Now, in the EU region, it's still pretty tough out there. Potentially, there is talk of a sort of Gaza ceasefire, but that is sort of still sort of in its very infancy stages, and there's still plenty of fighting taking place. Now, interesting in Australia, you saw the CPI come in quite a bit weaker there at 3.4. So again, further indication that inflation is clearly on a downward path. But then the recent rate hikes are starting to impact now with GDP for the 6 months. Was around sort of 2%, that's down to 0.04%. So certainly those higher rates are biting on the Australian economy. Now, a similar case here in New Zealand after the Reserve Bank left the OCR at 5.5%. But certainly the commentary was a little bit less hawkish than first anticipated. Because clearly inflation is more balanced. Economic growth is still a little bit sluggish out there. There is a little bit of growth out there, but it is sluggish. And what was interesting as well is that peak rates for the OCR have now come down to 5.6. So, potentially we are at the top here. There will be no further hikes. Obviously, data dependent. But as sort of discussed here before, it'll be very interesting to see what happens if the US does start to cut rates in sort of June, July, as sort of predicted at present, to see what the Reserve Bank would do. On a positive note, certainly tourists are still pretty abundant here in New Zealand and spending New Zealand dollars, which is good for the economy. And also as well, obviously the dairy sector has had a little bit of a boost as well with the recent dairy auctions that has pushed prices up. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.